Everything working? Okay, seems like so. Thank you guys so much for tuning into today's video, or I guess live stream. Today is May 9th, 2025, and to begin today's live stream, like I always do, let's take a look at the economic calendar. Economic calendar here for today. So it looks like we just have a bunch of FOMC members speaking today. Nothing too eventful. They're all red, or I'm sorry, they're all yellow to orange photo news. So nothing like too exciting. But yeah, going into the actual technicals here. So the weekly draw of liquidity was taken yesterday, which was the weekly high. I've been, reiterating the fact that I want to see us take out previous week's high here for a while now. And so, yesterday we did end up taking out previous week's high. And now, because we took out the weekly high, I can't necessarily rely on the weekly time frame anymore for a source of, I guess you can say, like bias order flow. Yeah, but more specifically today, I would actually rely on the intraday time frames. And what I mean by that is so this is the daily candle that was created yesterday, right? Where this red line is drawing your attention towards. So this daily candle here did not close like extremely bullish, and we don't really have fair value gaps to support the idea of us taking out previous day high. But if we do end up taking out previous day high, then that's completely fine. But yeah, that's basically all I have for the daily and the weekly time frame. Like I said, I'm not going to be relying on those two time frames coming into today. What I do want to mention is that today is a Friday, and typically on Fridays, on the weekly time frame at least, we tend to have retracements, right? Because a candle never really just continually goes up, right? There's always the open, there's always the manipulation lower, and then an expansion higher, and then a close. The close, we tend to retrace back inside the dealing range. And this is a bullish candle right here, right? And typically, prices likes to retrace near the end of the lifetime, or I guess the end of the time frame, the time period. And so coming into the week, or coming into today, we might end up retracing and closing within the 0.2 to 0.3 of the dealing range, of the weekly dealing range. That is a possibility. And I just wanted to mention that because that's pretty important. It's called the TGIF setup. Thank God it's Friday. And essentially it's just playing along with the power of three, understanding that prices tends to retract back into the dealing range. But yeah, so coming into today, like I said, I'm gonna rely on the 4-hour candle, 6-hour candle, 8-hour candle, 10-hour candle, the intraday time frames for a bias. So depending on how we close on this 4-hour candle and how we close here on this 8-hour candle will give me an idea of where prices wants to go during the morning. And yeah, so we still have about 18 minutes left. I don't want to force an objective with prices not even closing yet, so I'm just gonna wait and we'll see. But yeah, it's been a pretty interesting week so far. It looks like we created the low on Wednesday, and then with FOMC during aftermarket hours. We expanded higher, and then we took out previous week's high on Thursday, and then now I I'm anticipating some sort of consolidation, to be honest. Not really expecting too much here now. But yeah, I mean, that's pretty much all I have, at least for the technicals. I do want to take a look at the Wall Street Journal and see if there's anything that's like, eventful. So one of the articles I did read yesterday, it stated that the United States and Europe, we were able to come to a trade agreement and or create a trade deal, but I mean they are still going to be affected by 10% tariffs, which is not any reciprocals. And Trump signals support. And it looks like Trump and China, they are trying to create some sort of deal in order to not have this 145 tariff on Chinese goods, besides maybe like phones and iPads. But yeah, I mean, very interesting. Another headline is the India and Pakistan kind of conflict. Venture capitalist Sarah Guos, the rising star among. Oh, what is this? Oh, it's a podcast. Interesting. Trump brings millionaire tax idea back to life. Raising top income tax rate faces resistance from many congressional Republicans. President Trump is considering raising the top individual income tax rate to 39.6 for those making over 2.5 million. The move aims to ease Republicans' struggles to fit tax cuts into fiscal bill and counter Democratic charges. Many GOP lawmakers oppose a higher top tax rate, posing a challenge in the narrowly divided House and Senate. 15 days after making a marginal tax rate increase off the table, President Trump put it back in play. The president, who rejected a millionaire tax April 23rd, is now considering backing a tax structure that would return the top individual income tax rate to 39.6 from 37% for people making over 2.5 million. People familiar with the White House discussions said Thursday, Trump on Friday, then posting on his True Social network that he would accept a higher tax rate at the top, but complaining that Democrats would criticize Republicans for breaking the word on no new taxes. Many Democrats want higher taxes for upper income households, starting well below 2.5 million. Republicans should probably not do it, but I'm okay if they do, Trump wrote. The move, if it happens, could create breathing room as Republicans struggle to squeeze Trump's tax cuts into fiscal bill. They're trying to unveil in the next few days and push through the House this month. The higher the top tax rate goes, the easier it could be for Republicans to avoid deep Medicaid cuts and reduce other taxes. So, taxing the upper echelon of income is going to allow the government to cut taxes for lower income people and might not take a lot of money away from Medicaid help. It seems like also help counter Democrats' charges that GOP wants to cut the social safety net to pay for tax reductions for the rich, but many GOP lawmakers oppose a higher top tax rate, and Trump would need almost every one of them to endorse it in the narrowly divided House and Senate. The top tax rate is the untouchable hot stove in the Republican Party, which has partly defined itself in opposition to any rate increases for more than 3 decades. Republican leaders are already having trouble corralling all the votes they need. To raise the cap on the state, local raise the cap on 30,000 to 10,000. They said the offer was insultingly low.
Look in the mirror and say, you know, this is real, right?
Representative Chip Roy is a Republican hardliner from Texas who's at the center of the fight over Trump's tax bill. And this rising government debt is what he's most concerned about. It's why he's demanding big cuts to federal government spending if Congress wants to extend Trump's multi-trillion-dollar tax cuts and implement other new tax reductions.
I'm calling for no tax on tips, no tax on overtime, and no tax on Social Security benefits for our great seniors.
All of that could reduce revenue by $2 trillion over a decade, on top of the roughly $4 trillion it would cost to extend the expiring 2017 tax cuts.
We can't continue to have, quote, a free lunch by just saying that every single tax cut pays for itself.
Republicans are struggling to find common ground, but the ultimate bill will have to pass through the House, and that's when Roy will have the most cards. He sat down with Wall Street Journal tax reporter Richard Rubin to discuss what he's willing and not willing to compromise on, and how he approaches working with the president.
The House budget that came out of the House in February really has a lot of your fingerprints on it. This idea of yoking the tax cut extensions to guaranteed floor spending cuts. How did you get that in there, and why is that linkage so important?
For too long, this is me speaking, too long Republicans have taken the easy path of the political one-way ratchet of saying that tax relief is the thing that's going to motivate them. But we've got to do our part to make sure that we're doing the job to actually get deficits down. So we did something which we hadn't done in a long time, if ever, which is to put in this and say, look, we're going to tie what you accomplish with respect to spending restraint to the tax policy. So if you get enough spending restraint, we can get more tax relief. And I think that's a good way to try to model it.
How flexible are you, right? Both the houses that have to agree on the ultimate bid. Like how much wiggle room is there?
What we put forward in the House, frankly, was pretty dang modest. If anything,
in what sense?
Well, I should be kind of embarrassed, actually, because we're talking about, effectively, $200 billion a year in spending reductions. Now, is that real cuts, or are we reducing the growth? They're really reductions in growth. And so that's a meaningfully different description. We've massively exploited entitlement and mandatory spending. We have gone up in discretionary spending. And all we're putting forward as the House Budget Committee, these crazy conservatives in the House Budget Committee, is $200 billion a year in spending restraint.
And on spending, like some of that is inflation, right? It's not that all those programs have gone
No
up
question.
by like
still a crap ton of money.
It's still like a
Right.
significant increase.
Yeah, but you can't discount that. Yes, of course, inflation is a big piece of that, but you can't just blame it off on inflation. The spending is also part and parcel. It's a circle when you talk about inflation. We spend a lot, we get inflation. We get inflation, we spend a lot. We get more spending and we get more inflation, and now we're dealing with bond rates and interest rates and debt.
One of the key issues in this debate over spending cuts is the fate of programs like Medicaid. Some House and Senate Republicans are wary of making cuts here because the program benefits working class voters who have become an important part of their base.
On Medicaid, what do you think are the sort of most reasonable changes they can make? And don't people get less generous benefits, or you're pushing Congress to states? Like, what happens if you push on that balloon a little bit?
Well, first of all, let's look at what's driving the problem with Medicaid. We have this expansion population where they get a 90% federal funding versus the vulnerable population, which is somewhere between 50 and 70% depending on the state.
Interesting.
More for the expansion population, which tend to be more the able-bodied, particularly single population, than it is the most vulnerable. Work requirements would save somewhere between 120 and 250 billion dollars if you just simply say, yeah, you got to demonstrate that you're working. We could try to eliminate the improper payments. That's about $1 trillion of improper payments.
Hard to get at those, right?
It is hard to get at those, but they're real. Like, we're paying people who aren't supposed to be paid, and we are paying them amounts we're not supposed to pay them.
What do you say to Medicaid beneficiaries in New York?
That's interesting. Well, I mean, trying to reduce tax rates is only going to increase the debt that we are going to incur. The trade deficit and the amount of spending that we do compared to how much we make is not ideal. And it seems that hopefully Trump recognizes that, right? I think we should focus more on the longer term goals here rather than doing and creating, policies that might benefit you in the short term, might make you more popular, but it's going to come back and sting us in the butt later on. I think we should take a more broader and more long-term look at these policies and how they're going to affect the long term. And yeah. Alright, so going back to the actual charts here, it looks like we're just gonna close like undecisive based on the 4-hour candle right now, and based on this 8-hour candle, it's rather indecisive. Not really sure what we should do here, but yeah, sometimes it's gonna be like this. You don't want to be the one to really force an idea to happen, so you just have to just pivot and understand that these things could occur. But yeah, before we actually close in the 4-hour and 8-hour time frame, let's hop into a chess match and see what I can do here. Oops. Oh wait. Sorry, my mom talks really loud. I'm not too sure if you guys can hear it, but that is the Madre. Oh boy, we're not looking too hot, not gonna lie. Oh my goodness. Oh my goodness. Boys. Oh man, this is interesting spot that we're in. Boys, I think we lost. I'm not gonna lie. There's the open. Let's see. Ooh, oh boy. I go here. I have to really be careful of the checkmate, but I'm not too worried about what's gonna happen here, to be honest. 4 hour candle. I mean, we did have that up close candle, with the bullish candle, but to assume that we're going to take out the high is, I'm not too confident in I'm not really favoring that. Not really favoring the idea of higher prices just yet. Wait, did he? Was that a blunder? Oh, he might have blundered. He blundered. I can take this pawn now. This might be... Oh, boys. This is my chance. Oh, man. Oh, man. How do I get this? Oh, my gosh. Oh, I need to... Oh, my gosh, I need to just take... Oh, boys. It's... freaking... Oh my god. Not fast enough. I am not fast enough. Alright, let's do one more and then I'll go over the trade checklist here with you guys. You go here, I got here, here, here. He's really just pitting. Is he gonna go up? Thought so. Let's prep this trade journal. Hehehe. I'm gonna chase his bishop to the ends of the world. Here. Oh, oh, okay. I see. This nut is being pretty. It's being effed up, man. Okay. We go here. Okay. This. This night. Bro, this night's actually, like, it's actually such a useful night. I cannot believe how much impact this night has had on me now. Crazy. It's just absurd. Hui. Hui hui. Hui hui. Let me go here, because I have my pawn, I have this, and I'm also attacking his bishop. Hey. Now I'm attacking this. Oh, nice. Oh my gosh, wait, I can just take his queen. What am I doing? Bro, what am I... Oh gosh. That's actually such a free queen. And, I stack my rooks and I'm gonna maybe start like bringing out my rooks here, maybe. See if I can take some Okay. He's running out of time. And this, I want to say that's a troll, but uh, oh boys, it might be GG's from timed out. All right, well, let's get into the pros and cons here for this week. Pretty, I would say, I mean, eventful week, I would say. Yeah, bye, man. You know, we had FOMC, but we didn't, like, if if I were to turn this into a bar chart, or not, let's do a line chart, like, really, like down, up, down, up, down, up, and then just really back and forth. But overall, I mean, we did have a setup here today, and or not today, I guess this week. But I'm gonna go over the pros and cons with you guys, and then review the trade, and then yeah. So from the pros and cons from last week, you know, the main, I guess, value of mine has always been to take consistent trades, right? That's been the most important thing that I've constantly, you know, worked to perfect, is just really implementing consistency throughout my approach. So requiring a higher time frame objective, a model, and an entry pattern, right? Just understanding where prices wants to go on the higher time frame, aligning that with a lower time frame model, and then zooming in again to find an entry pattern, right? Those three components are what makes up my strategy, right? And if I can continuously find those three components, then it would just keep me consistent. And so a higher time frame objective of mine, you know, right, is essentially higher time frame objective is like the bigger reason on why prices should continue in a specific direction, right? And there's two, I guess, order flows, two higher time frame objectives that I normally look for, and it's called the expansion model and the equilibrium model. The trade that I took this week has a bit of both, and I'll explain why more in depth later. But the third pros here is just being able to really utilize a fair value gap and understanding what fair value gaps are. They're essentially inefficiencies in price discovery, in price expansion and contractions, where it allows you to understand where there's been displacement strength in a specific direction, right? And it just shows you if the markets have the willingness, the momentum to continue in that specific direction. And so some things I can work for, continue to work on. This is a little bit different, but I am trying to be able to learn how to fundamentally, you know, evaluate a company. And based on my classes, based on my college classes, I was introduced to this. I will be it's essentially I'm evaluating a company based on its cash flows, future cash flows being brought back into the present. But yeah, so some improvements here, like I stated before, being consistent, requiring those higher time frame objectives, the model, and entry pattern for every single one of my trades. This just allows me to be consistent and really highlights the strategy of mine, right? If I'm able to identify all three of those components, then I should take the trade, press the button, and just let the trade do its thing. No need for me to really worry about the outcome. The only thing that I should really be focusing my mind on is identifying those three components. Once those three components are met, I literally do not have to do anything besides let the trade do its thing. If it stops me out, then it stops me out. And the second thing here I just want to go over is just, understanding what higher time frame objectives are and how to align with the higher time frame order flow. So the trade that I took here from last week was based off of this 30-minute candle here. So this 30-minute candle, even though it was an up close, notice how bearish it closed, right? It's a gigantic wick to the upside, and it, what I'm understanding, what I'm reading from this candle is it's essentially telling me that, hey, we should take out the 30-minute low here, and we're going to be bearish for the next 30 minutes. Knowing that, understanding that we're going to be bearish for the next 30 minutes, I'm only going to be favoring sell side delivery setups for the next 30 minutes, right? So going from the 30-minute time frame, I zoom in to the 50-minute, and I notice, hey, this 50-minute candle here, down close candle, easiest assumption to make is that we're going to take out the 50-minute low. So how do I kind of mentally visualize this is that we should take the 50-minute low. After taking out the 50-minute low, we should expand lower towards the 30-minute low because it is our higher time frame objective to do so. And it makes a lot of sense. Let's see. So higher time frame objective, 50-minute model. Going from that, there's an entry pattern on the 5-minute time frame, and there's also a dealing range. So this screenshot here, you guys can kind of see that it's an expansion model. Why I note that it's an expansion model is that we take out the 50-minute low, and we should continue to expand lower towards the 30-minute low. That makes it an expansion model. But if I were to draw a dealing range from this swing high to this swing low, you can see it visually here where that green box is discount, and that's another reason why prices should continue lower, right? Buyers are going to want to be buying in discount, sellers are going to be wanting to sell in premium. If that logic holds true, prices should reach this level here, right? And so once prices opens up in the next 15 minutes, I am going to allow it 15 minutes, right, to take out the 15-minute low. So I have a time window on when I expect the trade to complete its objective, but I also have a fair value gap that supports the idea of lower prices. And we also completely disrespected this 5-minute fair value gap here as well, this BISI. And then we created a SIBI. And then once we open up here at 12:30, we trade up into the 5-minute fair value gap. We respect it, we continue to hold, and then it took us about 15 minutes, but after 15 minutes passed, I moved my stops to break even, and then we took out the 15-minute low, expand lower towards the 30-minute low, and retracing back into the discount of the dealing range. Very simple trade, right? simply just took a look at prices, kind of aligned myself, created a objective, aligned myself with the objective, and then found an entry pattern. Very simple. All I needed to do was press the button and execute. That wraps it up. Hopefully that kind of gives you an insight of how I view things. And yeah, thank you guys so much for tuning into today's live stream. And until next week on Monday at 8